Hi guys, thanks for tuning in to another episode of Nuggets News. Well, another big week behind us. The Fed have cut rates again. So much crypto news and macro news to get through. We do welcome over 500 new subscribers to the channel, so thanks for joining us on this journey. And if you are new to our weekly update, we go through a bit of the local news in Australia. We tie it in with the macro news, and there's actually a lot of crypto news that's intertwined with that macro news these days. And then we read through all the crypto highlights building up to the main projects, Ethereum and Bitcoin, and then we do a bit of technical analysis. So just a reminder that we're in Adelaide this Tuesday night for the premiere of a new crypto documentary, which is going to be fantastic. The directors made a few documentaries you might have seen in the past as well, so hoping to meet plenty of you in Adelaide this week. And just a reminder that our offer of when you sign up to eToro, deposit and make your first trade, you can get $100 free Bitcoin, and that is in the description down below. So into the local news here in Australia, and again we had bank outages, and you guys know the story, trying to phase out cash down the line. This is going to be a big issue. We now see Woolworths announcing that they're going cashless in a few of their Sydney stores as a bit of a trial, and whether it's the robots taking our jobs or just getting rid of this cash, it is those longer term trends of negative interest rates that really worry me. Now, in terms of the housing market, we've seen a lot of talk about how quickly and aggressively it's rebounding. We will have our regular update with Martin North this Friday, but it's the premium properties and the rich suburbs which are booming the most. And that's because the wealthy get the most benefit. They've already got money and capital to spend. So when interest rates get lower and banks are being looser, it's a field day for them. They can negatively gear more properties. Meanwhile, the majority of Australians that are struggling to save up that deposit, they can't afford. Now they're competing, with the wealthy guys that can get bigger loans. So it's no surprise to me that these predictions of house prices going up another 30%, subprime lenders and whatnot, that's great, but you're just blowing the bubble bigger, trying to get the economy going, and that's not what we should be doing. Interesting to see that Narita Knisby here, so she's from REA, they're one of the property providers here, and she's been coming out and saying that a few of the indexes and the data that they've been using is pretty misleading, and now she's kind of been pushed on the outer from the property industry. So it just upsets me how some people are treated that are trying to tell the truth. At the same time, we've seen the stats here around the properties that are in negative equity. So that means that your home and is now worth less than the loan you've got. So you're underwater. And we see those numbers, ticking up a little bit. It's more so in WA and Northern Territory, but really these numbers are still relatively low to other places that have had sort of housing crashes. Now, in Australia, we've got a lot of overreach in what's happening just in the past 2 years in terms of our privacy, civil liberties being eroded. And this week we heard that the Australian government are proposing face scans, facial recognition for watching porn online. I don't know who on earth is going to agree to this, and there's always going to be ways around these things, but who even thinks of these things? Why is this necessary? I don't know. There's so many other things they could be concentrating on. We also got news that they're going to trial their Chinese facial recognition in schools. And the thing that worries me about all this is that this is a huge target for hackers. As grim as it is to say that child data is sells for a premium on the dark web. So hackers are going to target this stuff, try and get the data about the kids, and then they're going to try and sell it to the bad guys. And governments, we see these hacks every day. It's not secure. It really worries me where this is all going. We also saw the push for the digital driver's licenses, and this is the permissions that the app needs for all versions of the app. So a few people saying, I had a look at this and it doesn't have all these that you've got here. So this is for all the different versions of this app. If you're going to have a driver's license on your phone, all the things that we'll need to access on your phone. And again, maybe they're not using it for the bad stuff. Look, the evidence probably says otherwise. They're collecting all that data and using it against us in some way or another. That's what we've found out, particularly over in the US. We know this social credit system in China, it starts off small and then it expands. So now, it's going to be used for security checks and whatnot as well. And the FBI has been collecting the data about, your face, your eye scans, your walking patterns, your voice. And who on earth gave them permission to collect all this information and track it and monitor you? Watch that interview Edward Snowden did with Joe Rogan. I'm trying to get him on the channel, but it is mind-blowing, all the information that they have and are going to use against you, and that can be hacked onto the dark web, and then hackers can use that information against you to extort you as well. Recently, we saw Facebook buy a little device maker that measures heart rate and can measure your thoughts, is where they're going with this technology. So Fitbit have now become the latest little device to be acquired by Google. Similar vein of thought, big tech, these giants, they want every bit of data and tracking of your biometrics that they can possibly get. So again, this data collection is a huge theme going forward. Now, one of the things that we saw this week, and a few people, I got some interesting comments on Twitter when I shared this video saying we've seen a lot of protests this week around climate change, and I'm not going to get into my thoughts on all that. Try and keep these videos politically neutral, but Scott Morrison came out and said he's doubling down on coal, the mining industry, stick to what you're good at. I'd love to see us go so hard on renewals that rather than banning coal, let's just make it so good, and in terms of the renewable energy and the solar-rich environment we have in Australia, let's not even have the need for these other things. Let's make so many high-paying jobs in these newer industries that it naturally phases out in a free market environment. And a lot of people are unhappy. Look at the like-to-dislike ratio on this video. He's saying that protesters are going too far. We're going to have to sort of introduce laws to crack down on protesting. So I just think, whether it's a tiny percentage or a small percentage, no matter what you think, I think we're going to see more and more protests in Australia, just like we've seen globally. If you watch the documentary we did, I've highlighted all the reasons why Australia is lacking vision, and we're so obsessed with property and mining and our banks. And yeah, we haven't seen a recession yet because of the immigration rates that kind of saved us from a technical recession. But Google searches for recession in Australia are spiking to the highest levels since the GFC. With all this happening, it's never been more important to protect that nest egg. So if you are interested in a self-managed super, we do have the partnership with our sponsor, New Brighton Capital. I got a free consultation you can take advantage of, guys. Get yourself exposure to some gold, some Bitcoin if that interests you, defensive assets, and start to look after that yourself rather than leaving it to somebody else. Now, if we head over to the global markets, we're seeing more and more of these capital controls. So over to Lebanon, where they're trying to stop money leaving the banks. We've seen a lot of protests and civil unrest there as well. Look, fractional reserve banking, it's always going to be an issue. The Bahamas are trying to launch their own currency these days. All these banks are trying funky things, but it doesn't really change what's going on. Argentina placing restrictions on certain Bitcoin purchases. I know they've banned all buying of Bitcoin with credit cards. And, why wouldn't you? If your currency is hyperinflating away, I'd be maxing out credit cards, buying as much Bitcoin as I can. So yes, they're trying to clamp down on this stuff because of how poor their local currencies are. Now in Japan, it's the 11th anniversary of the Bitcoin white paper launching. And one of the ideas that I floated this week was the name Satoshi Nakamoto, are those Japanese connotations rooted as a warning message, as in that Japan have been through this decades ago. That's a warning sign for the path that the West are going down. That's why I invented Bitcoin. Is that what Satoshi's trying to tell us? And the Bank of Japan have been at low and negative interest rates. They've been printing this money. They buy every bond that's out there. They've had to start buying all the shares and ETFs that are out there as well to prevent deflation and everything from collapsing. And now they're going to have to start lending these ETFs and kind of become a broker. This is what's going to happen in the West. It's silly to even think why we're not having the debate about should we try something else, because look what's happened in Japan. And some people say, oh, it's different, it's different this time, but no, I don't agree with that. Now, Hong Kong have plunged into a recession. I've been talking about my friend that lives there, and he said initially it wasn't too bad. A few weeks later, he said, yeah, this has got bad. It's going to cause a recession because people aren't going out and spending. And Hong Kong isn't this, third world country. This is one of the richest places. There's lots of capital there, expensive property. All of a sudden, within a few months, they're plunged into a recession because of civil unrest. And this is what we're seeing spread globally with people unhappy with banks and politicians and inequality. Now, another Chinese bank, this was the fourth one to collapse. They were offering people sweeteners, giving them higher rates of interest and, bonuses and gift vouchers and all sorts of things if they didn't withdraw their money. So they had piles of cash on display, trying to convince people that they don't have the fractional reserves, they're not going to implode. But the government once again having to step in for the fourth time this year to shore up the banking system in China. Now, as this credit crisis unfolds, I've spoken about all the bonds that are coming due. Another steelmaker in China defaulting, and when people start to default on all these loans, it starts that chain reaction, that contagion effect. So as you can see here, this is the number of bonds that are coming due, and a massive, it doubles next year to 2 trillion yuan. And if they're anything like those steel manufacturers, they're not going to be able to pay it, and that is not a good thing. One thing the Chinese are good at, though, is their patriotism. So with the trade wars heating up, we've seen sales of Chinese smartphones jump 66%, and we know that Apple phone sales in China are definitely slumping. So supporting their own, that protectionism theme we're starting to see, and that Donald Trump pushes as well. So speaking of Donald Trump, over to the US now, where pending home sales have actually surprised. The housing market is reasonably strong in the US, and I keep saying it's the cleanest dirty shirt in the laundry. So the stock market once again hit record highs in the US. I've been saying as long as they keep getting these rate cuts and cheap money, stocks are going to continue higher. It doesn't make sense. Valuations and fundamentals are out the window. That's just the way it is, guys. So put your trader hat on, take advantage of this. Q3 GDP, again, it beat. The consumer was reasonably strong in the US. They're keeping things going. Look, a lot of that is financed by debt, and we're seeing people actually start to default on their loans and fall behind on their loans. The auto loans now the highest default rate since 2008 during the GFC. Farmers, 40% of the income now comes from federal aid and insurance. So the free market's out the window here. Government, just like we saw in Japan, they're buying up stocks. The government having to support these industries that otherwise would not be profitable and be able to survive. Just all this tinkering because the system is not working. Now, in these countries that have really struggled and defaulted on their debt, they can't get good interest rates. So what they do is say, let's start a 50-year bond. We can't sell enough 10-year and 30-year. Let's do a 50-year or 100-year bond. And it's happened in places like Argentina, and the price of those absolutely collapsed. But now the US are literally floating the same idea. We should explore a 50-year government bond now because interest rates are so low, and our other bond market just isn't functioning as good as we would like it. So US banks aren't the only ones that are being hurt by low interest rates, and HSBC are vowing to, remodel, restructure, cut jobs, all the type of action that we see after their profits plunged 24%. We know that Deutsche Bank have been absolutely destroyed by the negative interest rates in Europe, and they're going to pass those on to customers. So, people say that'll never happen. It'll never be mortgages. It'll never be our deposits. And little by little, every month, it's creeping into more and more people that are being affected by negative interest rates. And the Deutsche Bank share price, again, tumbling. We know they just can't restructure. They've got too many bad debts on their books. So IMF, the new president of the ECB, former IMF head, Christine Lagarde, has come in, and one of her first statements here she's saying is we should actually be happy that you have a job, and if we have to sacrifice your savings. So if we have to go deep with our negative interest rates and we have to erode your savings and punish savers, look, don't complain, because that's actually keeping your job. So the lesser of two evils in her mind, and that shows you her thought process and where she's going with things in Europe. As they take interest rates more negative, the US are going to have to do it as well, or their dollar's going to get too strong. Australia is in the same boat as the US. We're going to have to take rates negative or do something. Otherwise, our dollar's going to get strong and we're not going to be competitive, and we're going to enter a nasty recession. So Germany has been the engine of Europe. Unfortunately, again, their exports have shrunk for the first time since the GFC. Now, one of the things we saw in the Fed meeting this week was Jerome Powell get really nervous. Now, watch this video called Body Language on the Body Language Ghost channel. This was a fantastic view about the body language and the awkwardness, and how he's just not believing anything he's saying when he's saying that everything's great. Remember when they said one rate cut, one and done, and then it was two, just a bit more of an adjustment that we're done, and now it's three, and sure enough, what are they saying? We don't see any more rate cuts. They're going to have to continue to cut, guys. You know the story. Now, the interest payments just on the debt in the US have really spiked in the last couple of years. The interest on the debt in the next couple of years are going to hit $1 trillion at a time when they're running $1 trillion deficit, and their GDP is only around that mark. So they're not even going to have enough money to pay the interest on their debt. It's like someone that can't even pay their interest-only mortgage, let alone actually pay off their mortgage. So this is the number one reason why Bitcoin, gold, and finite assets are going to increase in value relative to dollars and everything else, these fiat currencies, because they're going to have to print so much of it to pay down these debts. So I can't make it any clearer than that. Hopefully, those of you that attended the gold conference last week really enjoyed my presentation on why Bitcoin and gold are both important. This story got a lot of hits on our website, guys, nuggetsnews.com.au, if you want to check that out. And I'm going to upload this presentation in high definition and good audio quality once we've finished editing that in a couple of weeks. Now, a really interesting study by Genesis Mining finding that around a third of people in America still believe the US dollar is backed by gold. So education is key. I know it's annoying when you try and tell your friends and family to, watch Nugget's video about negative interest rates and debt, or the, recession that's going to come in Australia if they don't fix things up. People are asleep to it. But I think the turning point is once we get negative interest rates, on their bank account, and they realize that they're getting penalized for having money, and they have to at that point try and get into gold or Bitcoin just to protect their savings. So Tom Lee has come out and said that 99% of the US dollar is actually speculative. So what did he mean by this? Well, one of the critiques we get in the Bitcoin market is that so much is dominated by trading and not actual use of Bitcoin. Well, the same argument can be made for the US dollar. If you look at the Forex reserves and the amount of trading and speculating that happens on Wall Street every day, over 99% of the US dollar is just trading and speculating compared to people that are buying things and using the US dollar in the real economy. So it's an argument that I hadn't heard before. I really like that. I'm going to use it in future. Let me know what you guys think of that. But our markets, the derivative markets, have grown so big now that they're 99% speculation compared to real world use. Now, the biggest piece of news that we had recently was about China, and I did post over a year ago now. I do write-ups for our members. If you're not a Facebook person, you get these emailed to you every day, my daily updates and everything that's been happening in our community, all the latest news. So my China theory last year was they're going to launch their own currency, and it's going to let them monitor everything that's going on. So look, this week that did come true. There's rumors out there now that it could even be backed by gold, and that they've hoarded way more gold that they've been stating publicly. That's another theory that I had in my YouTube video this week. Watch my China theory if you haven't already. And again, it was good to see Max Keisner, repeating those thoughts around the backing of gold and Bitcoin and real world assets that these countries, China and Russia, are going to use to weaponize their currencies against the US dollar. Now, China, we had this news this week again, a little bit of a misinterpretation here and probably overstated. And I know I got pretty excited about this, that they're listing and allowing these licenses for local exchanges, but it wasn't really the case. It was more just a general business thing. So let's not get too excited about that. But we did have the news that, Binance are moving back to China. I've got that article in a second. We've got Jihan Wu jumping back in charge of Bitmain. Bitcoin Cash has leapt on that news and had a really good run lately. A lot of drama. The co-founder of Bitmain, who owns 1.6 million Bitcoin Cash, is meant to be leaving, and it's meant to be on bad terms. So is there a dumping coming there? I'd probably try and offload slowly if I own that much BCH and not try and crash the price. But let's see how that unfolds. Bitmain rumored to be doing an IPO in the US. This came just a day after we had another crypto Chinese miner trialing a $400 million IPO in the US. So there's lots of money floating around. There's been some wild valuations in the IPO market in the US. Let's see if a few of these big mining companies actually get listed on the US stock markets, or if the trade war plays into that as well. So as I just mentioned, Binance looking to reopen an office in Beijing, trying to take advantage of China's new positive stance towards blockchain after all the exchanges got banned in 2017. If you weren't around for that, that caused a big drop in price and a lot of fear at the time that Bitcoin was going to die. China have also come out with their latest rankings on all the different cryptos. EOS holding the top spot. I hear they love EOS in China. I'm not sure exactly what they based this on for Bitcoin to be 11th, if it's some sort of, Bitcoin isn't necessarily the best tech, but that doesn't mean, and it shouldn't be the top ranked coin. Tron number 2 as well. I'm not really sure if I agree with all this, but hey, the Chinese, if they like something, there's a billion people there that might push it up in price. Locally, we saw a green move from Independent Reserve. So carbon neutral, great to see this. Leading the way. A lot of Australian companies now have taken a bit of a stance on climate change, renewable energy policy, carbon credits. I've got the interview dropping with Power Ledger this week, where one of the things we do talk about is carbon credit trading, which they're getting into as well. Bitfenix exchange tends to be in the news a lot with Tether and all the issues there. I've always been of the opinion that there's a lot of FUD around Tether because all the other exchanges have their own stablecoins now and they're trying to capture market share off Tether. Tether's been around for 5 years and every year there's these rumors. And one of the things that Bitfenix have recently said was, we want to get that $800 million back that was frozen. And they've actually been proven correct here. Crypto Capital executive has been indicted in some wrongdoing there. So maybe they are going to get that money back. That would be good for Leo token. I might even do a bit of a write-up for members about a bit of an opportunity I see coming up there for the Leo token. But once again, Bitfenix have been proven that they're not the bad guys that they're made out to be in the media. Now, I've got my Horizon State top on. This one's been hard to keep under wraps, but it's very exciting to announce that they're back up and running. So a core of the team members, so technically new management, but the question that everyone wants to know is, well, what's going on with the token? So a lot of people would have sold when they got the bad news that they were closing down, and that's fair enough. So the idea here is that at some point before that, they're going to take a snapshot of who owned tokens, the people that supported them, the people that invested, and they'll do some sort of airdrop to the balances, in exchanges, work with exchanges, or if it's your own wallet, you might get a Horizon State 2 token to get them back up and running. So there's been some investors there. They saw the potential. A lot of their clients that were paying them said, we still want to use your system. Is there any chance you can start back up again? We want to pay you money and keep things going. So look, the wheels are turning there. I've been a big supporter of them. I believe it's a great mission. So awesome to see them back up and running. Another bit of Bitfenix news here about Tether. Tether now exists on the Omni layer on top of Bitcoin. The Liquid sidechain here has enabled exchanges to send large amounts of Tether to each other. So we've also got Tether on Ethereum and now Tether on Tron. But this is a bit like a Lightning network only for exchanges and big corporations. So very centralized, but it allows them to send different cryptos to each other very, very quickly. So that's known as the Liquid sidechain. Deribit was another exchange that had a bit of an issue this week. We saw some flash crashes anywhere from 3,000 to 5,000, 7,000 on different exchanges, and they were going to make customers whole, not even out of their insurance fund. They're actually going to take it out of their profits, $1 million there. So a good little exchange that has futures to trade. They've also got options, and I've done some videos around crypto options, and we're going to be looking at those even more going forward as the markets become more liquid. Those of you that want to sell calls and puts and increase the income you can get, protect your holdings of Bitcoin through options trading. So we've done units on that in our members area, and we are revamping that as well soon. The biggest news was BitMEX this week, though. So not only did they get hacked, and they had a massive data breach, their Twitter got hacked as well. Not good at all. Now, this is very serious. If you had your email that Bitfenix leaked, that is now out to thousands of people to the world, to the tune of 20,000 or so leaked email addresses. So if you don't use a VPN, if you don't use a password manager these days, and you're in the crypto and you've got, you're going to get targeted. The hackers are smart. They're selling this data on the dark web. People use the same passwords for everything. Guys, spend the money. For less than $100 these days, you can get set up with a VPN and a password manager. I can't recommend it enough. We're going to hear horror stories. This is really bad from everyone's emails being leaked by BitMEX there. You guys know that I made the move over to FTX. There's a link down below. I can't recommend them enough. It's the final straw for a lot of people for BitMEX. Now, another new scam that has been going around these days is live streaming. So 4,000 people were watching this video. They targeted, Ripple, Litecoin, and other coins here. And what they did was show you real conferences with, the real heads of projects talking on stage, but in the description they had the, send us crypto, we'll send you more back. Hopefully by now, if you're subscribed to the channel, you're not going to fall for any of these scams that are going around. Unfortunately, the same thing with the Litecoin video. 2,000 Litecoin was sent to the address, and the scammers have made away with that money. Really, really sad stuff, guys. Help your friends, education. We've done videos on that. I don't want anyone getting scammed. Now, Litecoin are looking to move quickly with Mimblewimble. They're looking to fund and work with other projects to really roll out that Mimblewimble privacy technology. So Litecoin turning into a privacy coin, I think that's very bullish for Litecoin midterm. Another project I get asked about a lot is Zelicah. They fall into that category like a lot of projects of a really high throughput blockchain that are promising big speeds and lots of transactions per second. And for me, those projects depend on their partnerships and who's actually going to use it. It doesn't matter how good your tech is if no one's going to use it. So $5 million funds for Oxford in their distributed ledger technology department there. Hopefully something good can come of that. Great to see that money going to use. Another little partnership, a bit of a sneak preview we had here was IOTA, mentioned by Dell and Linux with one of the platforms that they're working on there. So good find by a few people there. IOTA seems to have a lot of partnerships as well. So now it's, can they roll that out and fully remove that coordinator node and get that Tangle technology working for the Internet of Things and all those devices. Another project that needs to scale is Ethereum. So we've got that hard fork coming up. We've got Ethereum 2.0 coming up where you can stake. And one of the things they've adjusted is the number of shards they're going to break the network up into. Because they've reduced that number, they're now going to increase the block size. So the amount of data that each shard, I guess, is processing. So if this all comes off, it's a big gamble. It is risky. You have to acknowledge that all these crypto projects are experimental technology. And as soon as we get, even Bitcoin has its challenges with scaling, guys. So I want people just to acknowledge that. Sometimes too many people think it's a guarantee that these things are going to work and come up in price. And if they do make this transition smoothly, I think we are going to see a huge increase from price. And I think this is why Ethereum has lagged a little bit compared to Bitcoin because of this uncertainty. Bitcoin is going to scale with technologies like Schnorr and Taproot. We're going to aggregate all these signatures together. This is going to make the network so efficient that hopefully we don't even need to increase the block size because we're going to be batching all these transactions together, aggregating signatures, really cool stuff. It's going to add to privacy and good to see the developers doing things like workshops on this technology. And something I'm going to talk to Andreas Antonopoulos about when he's on the channel soon. Another big bit of news was Bakkt launching their consumer-facing app. Starbucks, it's going to be under consumers' noses, Bitcoin logos and whatnot. So let's see if that does get out in the first half of 2020. Options, the volume on their futures product, it's all heading in the right direction. So look, I'm not a big fan of all that stuff on Bakkt, but either way, they are trying to do their most to get Bitcoin in the minds of the average consumer. Now, Deribit have sponsored our technical analysis again this week, so thank you to them. This week I did do a tutorial with explanations of all the different order types. So there's about a dozen different order types. It's a really easy to use exchange here, guys. A lot of people ask me, how do I set a stop loss? What's a stop limit order? So that's all broken down in the tutorial I did this week. And those concepts hold true for all different exchanges, even if you're not necessarily going to use Deribit, but they do have an offer for you guys with a link down below. So into the price action. Well, this week we've actually seen some really positive action from Bitcoin. On the daily chart, we've held nicely in this bull flag. So the level I'm looking at now is right around 9,440 on the daily chart. We've had a few sort of wicks up there. Not convincing yet. The bull flag is still looking technically savvy here and strong with this declining volume, but now we need it to increase if we are going to break higher. Let's just have a quick look at those levels on the weekly. So the weekly closes here a little bit higher at around 9.6. So it's that zone there, 9.4 to 9.6. That's the area that there's going to be a little bit of resistance. And if we can get through there, that really sets us up for some strong moves higher after we had a nice turnaround. And again, this looks like a bit of a bull flag even on the monthly chart here. So big volume increasing on the way up. These weeks aren't really healthy with a lot of sellers, but look, people are stepping in and seeing value at these levels here. So look, I guess the bearish scenario is that we have a failed breakout and we have one more leg down in these levels that a lot of people have been looking at and hoping to buy at. But yeah, I definitely think that people are going to see that as value and want to step in there. So I just want to show you a few of our higher time frame moving averages, particularly on the daily, because we've held that 200-day moving average, and that's going to be really important support over 9,000 now. As long as that holds, I'm pretty bullish on everything that's happening. So I'll just flick on my other moving averages there. Let's zoom into the lower time frames. Just trending along this little channel there. Nothing new to add there. I just want to say that Ethereum has been lagging and it's hovering around this area, 185 to 180. It's been traded a lot there. It does look relatively weak compared to Bitcoin. So look, that's not great for altcoins. FTX did add their Dragon Index if you want to trade those Chinese projects there. Stock market's breaking out to record highs. Gold back above 1540. Silver above $18. Another thing I just want to announce for those of you that have stayed to the end is that we're working with someone to bring a gold and silver and Bitcoin portfolio. So that is going to be possibly available soon on eToro for you guys. I'm going to look to set that up for you. And I know a lot of people want to get exposure to those precious metals and Bitcoin, a bit of a safe haven. Hopefully that's available for you in your super as well. So look, take advantage, sign up, get that $100 free Bitcoin, have a bit of a play around with that, and hopefully we've got some really cool products available for you guys soon. So smash that like button, subscribe if you haven't already, share these videos around, and thanks so much for tuning in, guys. Cheers.